Today easily marks off single-handedly one of the heaviest days of manipulation. The signals of manipulation appear under specific circumstances, but today those signals appeared in the simplest and most basic forms, which point at blatant attempts. All that and not even to mention the Jolts surprise. Welcome back. This is ARCa, and let's dive into ticker symbol FNGR. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive into ticker symbol FNGR. And I want you to notice here real quick, first, we're just going to touch down with the Jolts surprise, right? So what you're looking at here is the Jolts job openings. So our forecast from the prior read of 8.92 million jobs, we were potentially looking at a forecast of 8.8 million, right? To diminish the amount of available jobs in order for us to, continue on this deflationary period for the macroeconomic circumstance right now, right? So less jobs would be the better thing for us to have, right? That's what the Fed wants. That's what the markets are trying to do. That's what we have been pricing in. But today there was a massive shocker with a huge rise of jobs availability at 9.61 million. This alone capitulated the markets, and this is what it looks like today. And trust me when I tell you that the markets today are absolutely, they were just more red. They were more red than you currently are seeing today, right? We didn't have any of this here. We didn't have any of this right here. We didn't have any of this in the earlier session today. If you go to the live stream from this morning, we were streaming this the whole time, right? This entire chart was blood red, with the exception of just a couple things, including Intel, when it was up at about 1.47% on the day, and then essentially dropped and started feeling the pressure here from the Magnificent Seven. Okay, so please go ahead and take a look at Microsoft at a minus 2%. 2.61%, Google at a minus 1.3%, Meta almost minus 2%. Look at Amazon at a minus 3.66%. Guys, today was absolutely a bloody day, and this alone can tell you that it had nothing to do with your ticker FNGR. This absolutely was a huge blatant shot of manipulation based on an entire negative read of the broader markets, right, team? So that was essentially the big, huge excuse to use against the ticker. And please notice that the drop on the ticker was absolutely bigger than anything else, right? We were looking at a minus 34% drop, almost losing almost every gain that it had over the last few days. How is that possible? Well, you know how. But the good thing is that while we were trading live today, team, we betted against the market, and we absolutely capitalized on the downside, right? So we put the short thesis up on the SPY. We went ahead and bet against the market and got ourselves some serious gains. Some of those gains led up to around a 135%. My gains personally went up to around a 68% gain on the day. Guys, I couldn't complain more, right? So we hedge against our positions. We hedge against our long positions. Everything is good. Not a problem whatsoever. This is why we study and we train like athletes, right? Because we need to be able to be adaptable. We need to adapt to the markets and really go with the flow here, or else we're going to get trampled, right? So congratulations to all of you for taking those trades alongside with me and the crew this morning on the live stream. You guys. So let's go ahead and dive in to FNGR here. And please remember that we are directly speaking of paper trades, right? So go ahead and click on the trading panel here. If you don't have a TradingView account, make sure to hit the link in the description below and sign up for a free account and check it out first, right? Then you're going to notice down here, paper trading. A very cool thing that I've started noticing here for the TradingView platform is this. Check this out. They have in beta now the Webull platform, so you can connect your Webull into the TradingView here, and you'll be able to trade your portfolio directly from this platform. How amazing is that, team? All right, so let's go ahead and put down here the FNGR chart, right? So here is the manipulation chart, team. Please look at this. What we are observing here are the yellow X's, right? So I want you to please notice how many there have been throughout the span of today, right? So let's go ahead and give them a count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 reads of manipulation in the market. That is 100% one of the heaviest days of manipulation that I've ever seen from this asset, period. Right? So this was one of the larger ones here. This was 1, 2, 3, 4, 5, 6, and 7 shots all in, actually, sorry, 6 shots in one day. Right? Guys, oh my goodness. Yeah, there couldn't be a deeper, more desperate attempt right here. I have to say it for myself. But this honestly flashed momentum towards the downside. So now, team, we definitely have to look at some lower targets. And I will go ahead and display those to you. First of all, it did look like we actually came back and tested a floor. This was that descending broadening wedge that we've been observing here for quite some time. We already knew that we were going to break out of this thing and continue on to the upside. This was playing a traditional play. It was playing a very textbook breakout play, just like always, right? So very curious here that price action would essentially lose everything and some from when we were consolidating here for a straight week, right? So everything that was gained over the span of 1, 2, 3, 4, 5 days, over the span of a week, was just lost all in today. Which, doesn't scream any type of manipulation, right? Cool. But anyway, it doesn't matter, team. That's how the markets go. This is why we prepare. This is why we train. This is why we trade. It's all good. It's part of the markets, right? So anyway, the 3-hour time frame is marking off a pretty bearish candle, right? So this candle here is known as a shooting star. Why a shooting star? Well, technically because we had an upside here, right? So we actually came down, we had an upside, we built this shooting star during that upside, and now this is suggesting a continuation to the way down. We have to prepare for that, all right? So after hours, I was very impressed to see that it went up to $5.40. Right, but this creates a lot of fear. This creates a lot of fear in the markets. A lot of people are just going to go ahead and get rid of their shares here and just look for a discount in order for them to get long the market again. That's fine. That's fine. That's just how it goes. All right, team. So let's go ahead and evaluate the potentials of a lower target. This price action here that we faced today, not only did it print a bearish engulfing on the daily time frame, but it also displayed to me that we could be trading a channel, an ascending channel. Right, so this is actually a pretty bearish formation itself, right? So I think that this is a pretty good opportunity for us to evaluate the potentials of price action here. So what I'm saying here is that on the daily time frame, there is a probability where we can drop down to the area of around 434 to the lowest end of the SMA 100 on the daily to be right at about $4.15. Now that 415, I'm gonna just say it like this: 415 to about 442 is an area of high confluence. Okay, first of all, let's go ahead and take a look at this. This is the daily Gaussian channel, and go ahead and notice here the bottom band, absolute confluence with that SMA 100, right? Very, very nice. And the fact that we actually broke below the mean band here from the Gaussian bands, that tells us alone right there, right? That this is getting prepped for a continuation to the downside here. Get a bounce from that bottom side of the Gaussian bands before a continuation onto the upside. That could be a possibility, right? So let's go ahead and take a look at a couple other things here. Now, this is the weekly time frame Gaussian band that you're observing here, alongside the SMA 200. Now, go ahead and take a look at where these are located, right? So I already was talking about a potential target of around 417 or 419. I adjusted it to 419. Why? Because of this gap. Take a look at this on the weekly time frame. Huge gap down here, right? And I would like for you to just observe how that gap just happened to open at the mean band here of the Gaussian band, so you can see that it's being used, right? So now follow this purple line here. This is the SMA 200, the 200-day simple moving average on the weekly time frame, right? And then you reach this area here to where we're absolutely sharing the top of the Gaussian bands, right? And the gap. So now we're talking about 419 to around the area of around 432. Sounds familiar, right? That's right. The total range, 415 to 442. That is what I'm looking at here, team. I really would like to point out here that we absolutely need to close this this weekly candle formation. It's going to be tough to do this, but know for a fact that this is broader market influenced and it is not ticker specific. Okay, there is a bearish engulfing here on the weekly time frame, but the difference here is again, like I said, First of all, it's being built during a downside, right? So we have a bearish engulfing during a downside, not really valid, right? Another thing is that this was broader market influenced, and that has nothing to do with the ticker here. So it could be very much a fake out, right? So this fake out, yep, I can actually see still a continuation to the downside here. But please remember, 2 days and 19 hours, pretty much 3 days here still to close this weekly candle. So it still has some time to actually realize its potential bounce from this way and recover entirely, right? So if it does recover, what we would want to see here is a close of this weekly candle upside of the opening from the previous one. And the opening from the prior candle is $5.11. You saw that today's price action led to $5.40 just in the after hours trading. So the Fngr has that potential to do that. But for now, team, I am betting on a continuation to the way down first before we can find some type of recovery, right? So now if you are observing here, this is the ARQ balancer, the ARQ trend line that is part of the 8 indicators that come with the new algorithms that I just released. And this indicator is particularly telling us that we are still in the positive side of momentum. How is it telling us that? First of all, notice how the candles start to go from green into purple. They get into a light red, orangey. They go into red, right? And as we start coming up, we go red into that yellow, orange, right? We get into that little yellow color right here, start turning green all the way to the top. That is because this indicator is paired with the MACD within the price action, okay? So instead of having a MACD as like some type of a moving average, we built it in to the candle formation so that it can display to you how momentum is moving throughout the MACD indicator. This is MACD here. So you can see that we are way in the top right here in the green area, and you're noticing here that we're green, right? So now when we're in the red area down here, go ahead and take a look at that. It's red, right? So that is the magic behind this indicator. It is creating the formation for you, and it is also telling you where you're sitting based on momentum, right? Not only that, it's giving you the pivot points before they happen too. So very cool little indicator here. So the reason why I'm pointing this out is because, yes, I pointed this symmetrical triangle out a few times. And pardon me, and it is suggesting a potential continuation to the upside. I want you to notice here, team, that August, right, just a couple months ago, you were sitting at $1.20, right? And this thing is now sitting at $4.58. It's quite the difference, and it is still well within the bounds of this area here. Now, notice how I did give you a bottom side target of around 415, right? The inflection zone for this particular run to the upside is located right here at $3.85. As long as price action is above $3.85, I'm sorry to say, but this belongs to the bulls, right? So yes, it feels terrible coming down from $7.90 something to $4.50 something, but you're looking at a weekly range here, and that's just how it's played. As long as price action is above $3.85, this belongs to the bulls. All right, team. So let's go ahead and just notice here that we are knocking at the door of that resistance here. And it is only normal for us to get rejections at this point. But let's go ahead and move on to the next chart and see what else we have in store for this ticker. Okay, team. So one more thing. On the daily chart, this is actually volatility versus momentum. Please notice that that the momentum here is still pivoted towards the upside. Why? Because it's still giving us the read for the statistical backtest as positive, as meaning that the signal is still fired, right? So as long as we are within the bounds of the critical expansion zone versus the critical contractive zone, this signal is still going, right? So this signal is the one that's telling us that we would potentially reach the top side of the the upper bound of the first standard deviation being 68.52%. In other words, right over here, right? That this is that back test, right, throughout the entire trading history of the daily time frame. So yeah, the signal is still fired. This is still suggesting that we would continue on to the upside here. Within the statistics, there are areas to where we have faced downside first before some upside, right? So it's normal for price action to do that. What's not normal is what we face today. I mean, this is clear. This has got to be the largest candle I've ever seen in. Let me see. So the size of this red candle here is literally the size of these candles back here for when price action ended up going to that $9.80 zone, and this was particular to September 2022. Right, so those were the last times we ever saw some candles this big. Yeah, the last one that we saw that big was on October 3rd, 2022, and we are on October 3rd, 2023. Inversely finding out that we can see some candles this big. Very curious that we can see this exactly a year later, right? So, yeah, as long as we do have that upside pivot on stochastic momentum, as long as we are within the bounds of critical expansion and critical contraction, the signal is still fired here, and it's still suggesting an upside continuation, okay, team? So, and the curious thing of this is not that it's still fired, it's that the $8.84 zone, otherwise known as the 2-spot 618 geometric mean at $8.82, happens to rhyme pretty nicely with the top side of this channel here. Why? Because this is potentially creating an ABCD strategy, a very, 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 very typical formation, right? So this marks off X. This is A. A actually gives way to B, right? B gives way to C, which is located where? $8.63, and then we would actually come back down to the support here, eventually finding some support at $4.65 after the statistical move has been acquired. Okay, so yes, what I'm saying here is, once again, this is suggesting a continuation to the downside here, anywhere between the areas of, remember, 442 to 415 overall. Right, team? So if that is the case, that means that there is a bounce coming in that would essentially take us to the top side and take profit of the 68 spot 52% move of the upper bound of the first standard deviation, aka the 2-spot 618 golden mean. Now, observing the let's go ahead and see something here. Yep, weekly time frame SMA 200 located right at about 427. Very close to that weekly gap right here, right? I just wanted to point it out in different ways for you to observe that, right? So, yeah, and it looks, obviously everything's going to be faced to the downside here, right? Every single time frame RSI will be faced to the downside, and that's why we're calling the downside first. But I want you to notice this. Bi-weekly time frame RSI is finding its support right now. So there is a curvature here. There is a drastic change in momentum here. And seeing that the price closed at 478, which is slightly up from the 458 that we closed at traditional market close, that is already indicating that we are potentially finding a floor very soon. That means that we can actually come down here, right? Find the support from the SMA 200, from the SMA 14 within the bi-weekly RSI, and then continue our way up, right? So it's looking nice. And please notice, also notice that we broke out of the SMA 14. We never came back to test it as a support. So now we're doing that. We can then continue, right? It's no problem. All good, team. But you can see here, you can see right here that we actually tested it one time before continuing on to the upside. This area here, team, this is that $9.80 run. All right, so actually it was well within this area here, right, to be fair. All right, so I think that is pretty much it for this video. Let's go ahead and continue the streams on tomorrow, team, but I just wanted to go ahead and put out the thesis here before we capitulate on ourselves, right? But everything is looking good. The price action can capitulate, not us. This is why we trade the market both ways, team. This is why we trade up and down, right? We must become very, very much resilient to the market conditions. And this is why we teach the offense and the defense. So make sure to get in touch with me for the ARC Masters course that has been replaced and offered again. Okay, so that's going to be ARC Masters course at gmail.com. Go ahead and get in touch with me there, and I shall give you the details for getting enrolled to this course, right, team? Really appreciate everybody for coming by. I wish you all a very good night, okay? So Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 ever, and forever. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well a very good night, and I will catch you at the bell mañana. Adios. Yeah.